From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for May 18th, 2017. In a moment, I will be taking a look at the AUDUSD, the Australian dollar versus the US dollar for today's trade analysis. But first, I want to recap a couple of the trade suggestions made over the past few days for our members. First off, starting here on the USDCAD, the US dollar versus Canadian dollar. Yesterday, the suggestion was to buy into the support zone, the 1.3600 level. That's the pink shaded area at the bottom of the chart. And as you can see, clearly it did rise from 1.3600 all the way into the 1.3650s and 60s and the blue shaded area at the top of the chart. If you are still in that trade, you should be in profit protection mode. Obviously, the market is finding some resistance here at the blue zone where historically it found support. So resistance here offering a clue to support 36.50 up to 1.3680. The only real reason to expect it to continue to pressure higher towards the green zone is that it must break through the blue zone, and obviously it hasn't done that. So protect profit if you're in it. Doesn't mean you have to close the trade, but just protect profit. If you're not still in it, I don't think buying it right now is a good idea. In fact, you might on an intraday basis be looking for an opportunity to go short here from the blue zone, because over the past few days, if we take a zoom out, you can see it's been falling along that red trend line. So a continued fall along the red trend line, selling into the blue zone and into these last supports could be an opportunity if you're not in the long. If you're in the long, of course, you want to protect profit in case it falls back down towards the pink shaded area, and of course a break through the pink zone could look for further reversal to go lower. I definitely think you want to pay attention to news coming up over the next couple days out of Canada, but also keep an eye on oil prices. They seem to be dictating a lot of the direction the Canadian dollar is going in over the past few weeks. Next, moving over to the NZDUSD, New Zealand dollar, US dollar. This is another trade that we suggested, actually still sitting into it, right about the entry level at 69.25 or so is where we got into the trade yesterday, just at the top of the yellow zone and into the black trend line. You see the black trend line coming down from the top. You see the yellow zone. Let's go ahead and zoom it in on this blue box and yellow zone. You can see finding resistance at the top of that yellow zone blue box for the past several weeks. Into 0.6935 is the top of that yellow zone, and again into the black trend line. The suggestion yesterday was to sell or go short into there, and obviously it really hasn't done much since we got into it. It's just been waffling around the 69.35 level. The risk, of course, is that it breaks the black trend line, the yellow zone, and goes higher. So we have a stop loss there to protect us in case the market pushes against us and goes significantly higher into the pink zone or higher. But as long as it's holding as it is underneath 69.35, I think I'm going to sit through this trade and see if we can get it to begin to start pressuring down like it did the last couple of times that we have been here. So I'm still sitting and waiting for this. Now, this is interesting because it's a very similar situation that we're going to talk about here on the AUDUSD for the day today. Of course, we have the bearish trend line. That's the first thing we want to make note of, the black trend line. Two times underneath that black trend line, in the blue circles, we can see the rallies into that black trend line and into resistance. Let's just measure a couple of things. Distances. The first blue circle, the lowest low to the highest high of the first blue circle was about 135 to 140 pips. And then it turned around and started working its way back down. Let's measure from the low to the current high. We're looking at about 135 or so pips. So we've seen a very similar rise, challenging the black trend line, challenging a resistance into the two blue circles. So for the time being, I don't think you want to buy it right now. Into or underneath that black trend line, that green zone, we're at resistance. Doesn't really entice me to buy it. Let's zoom it in a couple of times here. And again, you're into resistance. Take a look. Just the past 1, 2, 3, 4 days, finding resistance underneath 0.7445. The risk, of course, is that the trend changes, it presses through that green zone, and starts going back higher. So right now, no buying opportunity unless it breaks through 74.60, top of the green zone. So breaking through the green zone, sure, we then look for it to pressure higher into the orange or even possibly into the yellow shaded area. But as long as it's underneath there, I think selling is a better idea in the current direction of the trend. Following it all the way down to the blue zone at minimum, that becomes your first target on the way back down. And then through there, we might even look for it all the way down to the lowest low into the purple shaded area at the very, very bottom of the chart. that becomes our ultimate target all the way down at the bottom. So that's what we're looking for today. We have some Fibonacci overlapping there. Let's take it down to the 4-hour time frame real quick. And as you can see here on the 4-hour time frame, we did get a little bit of a push higher into the green zone on some news out of Australia yesterday evening. But clearly, this is the place to begin looking for selling opportunities. By the way, Forex Black Book is red. The trend bar is red. And we have a few red arrows signaling the shifting of momentum, the potential shift of momentum as the market is rallying into resistance. So I say this just about every day in the trade room. If you're going to sell anything, you want to sell it into resistance. So that's what we're seeing. We're seeing the market into resistance. Indications from the Forex Black Book of a bearish momentum building into the currency pair or into the black trend line. No real reason to buy this currency pair at the moment unless it dips that back to the blue zone or breaks through the green zone. So we're going to focus on going short. 74.45 is my pending sell order just at the bottom of the green zone to start targeting back to the blue zone or lower for the Australian dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.